Hi, thanks for joining me on my market report. My name is Mike, and if you're new to my channel, my videos, well, we create these videos on a daily basis on mortgage rates. We kind of get into what impacts mortgage rates on a daily basis. It could come from something where like the economic calendar, it could come from headline news, it could come from geopolitical. Sometimes even the news that's out there that would normally be good can quickly change sentiment into something negative. And if you're on the sidelines, you may not know or understand why this is happening. We kind of get into trying to explain the reasons behind these moves, and hopefully, if you're on real estate, it might help guide you as to what's going on with the markets. And if you're on the consumer, similar, but if you're probably most likely watching rates because maybe you're looking to refinance or buy a property and looking at financing, so that will impact your rate on your financing. This will hopefully give you some inside information as to what to watch for when you're looking to refinance or buy, and whether if you want to lock in or if you want to kind of hold a little bit, see if you can get a little better rate or not. This will hopefully give you that informed decision, help you make an informed decision before you proceed. Speaking of such, a little bit about myself is I am a loan officer. I do work with a national lender. We do loans in all 50 states. So if you guys are looking to refinance or purchase, please give us a shout. We'd love to be able to work with you guys. But we're also here to act as a resource for you folks as well. If you guys just got questions about things like mortgage rates, or you guys got questions about programs available out there and such, please feel free to reach out to us. We're here to help you guys out and answer any questions that might help you guys make an informed decision or help you guys out with what you're looking to do. Uh, so without further ado, we'll jump right ahead. We'll start with the economic calendar. The first item here is the well, it says here New York manufacturing. It's also known as the Empire State Index on here. This measures the manufacturing in the New York region. So back in December, we had a 31.9. However, for the forecast for January, it was supposed to be 25, but we had a huge drop here, negative 0.7. So it dropped 0.7, which means it's went from expansion, doing really good with expansion, to a contraction in January. So we haven't seen contraction for a while here, as that usually happens when we have recessions. But we'll find out. This could be due to Omicron and stuff that's going on around there, and maybe a lot of plants were kind of closing due to the virus and everything. But in any case, this is pretty big right here. Then we also got the NAHB housing index market. This is an HPI, or called home price index. Kind of gives you, or no, actually, no, pardon me. This is actually NAHB housing market index. This is basically confidence for home builders, and it went from 84 back in December. Forecast count for 84 to remain unchanged, and it did dip a little bit. A lot of that probably has to do with the quick rising rates that we've been seeing over the last few weeks in January. As we started January, also the rates started rising, and that's going to put a little bit more of a stranglehold on housing. So that will most definitely give less confidence for home builders as they try to build houses in time. Create some inventory, but we also have, of course, rising rates, which of course limits your buyers, as some people may not afford that as the rates have been rising, the price levels. So affordability basically gets a little tight as a result of that. So headline news today: stocks are also down, as you can see here. Mortgage-backed securities are down. There's still a big sell-off. We thought maybe with the 3-day weekend here that perhaps it would subside a little bit like last Friday. A lot of times they go to, it helps us out. So this was Fridays here. We had a pretty big drop there. And sometimes going into a long weekend, it helps us because a lot of times there's a flight to safety that instead of anything happening, we get that, but we didn't get that. The whole shift in the Fed policy with the a few weeks ago when they let that out regards to the balance sheet, that kind of just set the stage for more and more sell-off in the mortgage-backed securities as a result. So that's been kind of like the big thing. So they look like everybody feels that they're going to start raising rates in March after the tapering basically finishes, and they're going to basically start raising rates at that point. But they may also get a little, as I said, a little more aggressive in terms of reducing their balance sheet, which could include actually selling off rather than just waiting for maturities to happen and just not reinvest. They may actually start selling off, which will create more supply out there and may not have enough demand for those, and that creates that's just exacerbating the problem for us right now as they try to reverse their kind of easing when the whole pandemic began. So this is what's going on with the markets right now. Uh, so and then also we got the there's a few M&A. This is really impacting mostly like Nasdaq because of high growth stocks. They got a lot of these guys have it cuts into their profits because they do a lot of uh, borrowing to try to grow the companies, and this affects their profit margins substantially. So that's why you're seeing Nasdaq especially being affected by this. Um, and speaking of such, we have a merger announced where Microsoft is looking at buying uh, Activision Blizzard right now. And then we also got now we're also starting the fourth quarter uh, fourth quarter corporate earnings reports being released, and Goldman Sachs released theirs, and they showed a loss for the fourth quarter, so that didn't turn out too well as well. So not too good news so far today that we're seeing here, and we, as you can see here, we're down about 39 basis points, which translates, and this is just continuing to get worse. We had a big sell-off from right basically the beginning of the day. As you can see here, we went slightly up, but since then we've been going down, 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 down. So we've been getting pretty much a big sell-off so far today in terms of the mortgage-backed securities. Even when Europe was kind of seeing that, and then they kind of translated over to here. But in any case, what does that mean? Mortgage rates are higher today as a result. They continue their higher trend as rates continue to rise. As mortgage-backed securities keep dropping down here, mortgage rates rise. And then as such, you're seeing the same thing in terms of yields. Yields are rising as well. Now that one that was holding there for a while, that technical level that was holding there a while, we broke above that, and then we broke above another one. So right now we're just under 1.85 right now. And unfortunately, or actually no, I'm sorry. This was the level we were trying to break above. And then Friday we broke above that, and then today we broke above another level here. So it's just free falling right now. It doesn't seem like we're seeing the end. We thought we were kind of seeing an end, and then it just dropped again. So unfortunately, there's just no look as to where that end might be. But right now, treasuries are about just under 1.85. That's of course creating more pressure on mortgage-backed securities as they underperform. So, lastly, we'll take a quick look at the 30-year fix at 3.65 right now, and then 15-year now at 2.9. So we've been seeing that rise over the last few months, and what that is the average interest rates for the conforming loan limits out there. And they do have points built into these. If you follow my videos, we've talked many times about that, where there's no one size fits all. There's a lot of variables that go into factoring in interest rate. This is why if you're talking to a friend or neighbor, whoever, they don't, you could see different rates being applied. And of course, sometimes it's the timing of it as well. As you see with the chart here, that timing could make a difference as well. Even the same day where we have price changes sometimes due to the market volatility, it can affect it too. But the big things that affect rates are the equity in the property. So equity or down payment being put into a property. So equity, if it's a refinance or a down payment, if you're purchasing, your FICO scores, obviously the type of property, if it's a investment property, if it's a primary residence or second home, or if it's a single family versus townhome or condo or multi-unit property. Those are all factors on it. And then, of course, the type of loan program. Conforming limits don't have the same rates as FHA or VA. And then, of course, even our our jumbo loans, or sometimes what we get with the non-QM or other programs that are out there as well, like the bank statement programs, they may not also share the same program as well. So those are kind of factors that go into a rate, and not everybody has fits the same mold. But regardless, if you guys like these videos, we're wrapping up here today. If you guys like these videos, please help us out and smash that like button and then share us. We greatly appreciate that. In the meantime, if you guys got questions, please feel free to ask. We're here to help you guys out. And we greatly appreciate you guys. Thanks so much for watching. We'll look forward to see you guys in tomorrow's video. Have a great rest of your day. Bye-bye.